Welcome to virtual real estate seminars by me. My name is Mina Badros. I am a licensed real estate instructor and a licensed realtor. I created Real Estate Made Simple to make real estate simple for people and basically to help people accomplish their real estate goals with ease. We really focused on education. I really want to make sure people are knowledgeable and empowered to make the best decisions and take the right actions that's in their best interest for themselves, their families, and their businesses. Um, we provide consulting, as you'll see here, that strategy is very important, especially when it comes to real estate investing. And we handle all sorts of transactions, whether it's buying or selling, whether it's residential or commercial. We're brokered by EXP Realty, so all of our transactions flow to EXP Realty, the brokerage, and um, and that's how we handle all of our transactions. Today, we're going to talk about real estate investing options and getting started. And since we're talking about investing, I'll share with you that I'm also an investor myself. I actually got into the real estate business by investing. So before I got my real estate license, I was helping my family. I manage some investment projects that we have. And then I thought to get my real estate license to leverage for that purpose. Since then, I did so. And also, I helped a lot of other people begin or continue to build their investment portfolio. I've been involved in a lot of different projects as far as investing is concerned, from flipping homes to rental property projects, whether they're short-term rentals or long-term rentals. So I went through most of these I went through all of these processes uh, quite a few times, and I'm here to share with you some of that information. All right, let's get right into it. Can you guys hear me? Okay, you guys should be able to hear me and see my screen. If yes, just type the yes in the chat box. Give me a yes in the chat box so I know you can hear me well and see my screen. Awesome, awesome, awesome. All right, cool. So here's what we're going to cover today. I like to be very concise when I'm doing training. Hopefully, you guys will find this information to be helpful. What we're going to cover today, first is your goals and choosing the right investment strategy for you. Second is the different real estate investing options that are out there. And third, we're going to talk about financing, or pretty much how to fund your projects. Before we get into it, there's a few things that I want to make note of. One is that there are a lot of smaller details involved in real estate investing and just in the buying and selling of real estate. And although we're going to cover a lot of information today, and hopefully you will find the information to be great and helpful, we won't get to everything. So we're not going to cover every little detail. Also, everyone's situation is different. Everyone may have different goals surrounding real estate investing. Everyone may be in a different financial situation. You may have different interests, different desires, different things that you want or don't want to do, or different things that you are willing or not willing to do. So really, what is best for you is going to depend on you and what you want to do. So I'm going to cover a lot of generic information today, but to really explore your specific situation, I suggest that you schedule a call with me after this event, and I'll give you a link at the end of the webinar here where you can go and schedule a call on my calendar. And we can just have like a 15-minute call where we talk about, your goals, your situation, and how to, best structure yourself for your real estate investments. Another thing to know about investing, that it's all about the numbers, and I can't say this enough. Me personally, I happen to love numbers, and I've been working in numbers for a very long time, but not everyone likes numbers or just thinks that way. But when it comes to investments, it's all about the numbers, and evaluating your investment opportunity really comes down to the numbers. Some people are distracted by how good looking a property may be, or just the fact that they want to get into real estate investing and they don't spend enough time really looking at the numbers. At the end of the day, you have to look at what do the numbers look like on this investment project or potential project, and does it make sense? There are a lot of people out there who buy properties to flip them and then end up not being able to complete the job because they didn't do their numbers right, or they spent too much money into the project that they can't sell it for a profit and they end up selling for a loss, or they end up selling just to break even after spending quite a few months, doing that project. So, if your goal was to make money and you just spent 6 months rehabbing a home and you didn't make any money, so what was the point? So it really goes back to the numbers, working the numbers, making sure the numbers make sense before you jump into any projects. Luckily, any of the projects that I've been involved with have not suffered a loss. And I think a large part is we do the numbers very well, and we really take a look and a few looks at the numbers before we get into projects. All right. So let's get into the sections we talked about. First thing is your goals. Why is it important to kind of think about your goals when it comes to investing? Your goals are going to determine your strategy. Your goals are going to guide your strategy. Your goals are going to determine which real estate investment option or type to get into. They will also determine how to evaluate the project or the opportunity that's in front of you. A lot of people tell me, I want to get into real estate investing. Okay, like what does that mean exactly? What is it that you want to do, and what is it that you're trying to get out of it, right? When Depending on your goal, you're going to look at things differently, right? Also, your desired return is going to be different depending on your goal, and I'll unpack that as we move forward. So a few questions you want to ask yourself is, what are your goals, and why do you want to invest in real estate, and what is it that you want to get out of real estate? It's kind of the same question, just worded differently. Why do you want to get into real estate? What is it that you're looking to get out of real estate investing? Essentially it's like, what is it that you want to do and why do you want to do it? Right? What is it that you want to do and why do you want to do it? And when I ask people that question, a lot of times the answer is to make money, right? And I get it. That makes sense. Everybody wants to make money, but that answer is too broad. It's not specific enough. In order for you to be profitable and to build a successful real estate investing business, or to just be very successful in your real estate investing endeavors, you have to be more specific than just making money, right? So if you tell me you want to make money, okay, so what kind of money do you want to make? How much money do you want to make? What kind of returns are you looking for? There is more specificity than just to make money. I would urge you to kind of look at your long-term goal. Why are you even getting into real estate investing? What is it that you're trying to do? And here are just a few examples. Maybe you're just trying to make an extra lump sum of money at one time, right? Maybe you're trying to accumulate assets so that you can sell after a long time or pass them down to your kids. Maybe you're trying to accumulate assets so that you can sell after a few years and profit off, the difference in prices. Maybe you're trying to generate a steady monthly income for yourself or your family. Maybe you're trying to generate lodging income, which is, short-term rental income. Or maybe you're trying to acquire assets so that you can leverage them for lending purposes, and pretty much, buy more assets. So, acquire assets, you leverage them for lending purposes, and you buy even more assets. And the list goes on. Maybe you're trying to set up your family so that years down the line, your family's sitting on assets that are worth hundreds of thousands of dollars or millions of dollars, and has a nice cash flow coming in that your family doesn't need to worry about money, right? So your goal is really going to determine, okay, what investment type you're going to go after, and what will you do? Right. So your goals will determine the investment types you're going to get into or start off with, and it will also determine how to evaluate the projects or opportunity. Right. So again, you want to ask yourself what it is that you want to do, and why is it that you're trying to do it. So tell me in the chat really quick, but be very brief. What is it that you're looking to do? What are your goals as far as real estate investing? Some of you may know it. Some of you may not have that off the top of your head. If you need me to walk you through it and help you through it, I'll be more than happy to do so. So if you schedule a call with me after, we can talk through all of that. And maybe your goal is a combination of things, and that involves various investment types. So then, strategy becomes even more important at that point, because then you have to ask yourself questions as far as what is it that you need in order to start, what do you start with, and how do you set up yourself after the first investment to continue on investing towards your goals, right? So it's very important to get clear on your goals so that you can determine how you're going to start or what investments you're going to start with, and how will you kind of continue from there. Generate monthly income. Awesome. Awesome. Cool. So let's get into the real estate investment types. There's a lot of different investment types, and to kind of simplify it, I break them down into two categories. I see here somebody said rental or lodging income to bring in an extra $1,000 a month. That's very doable. So as far as real estate investment types, I break them down into two categories. First category is investing in real estate through buying or owning property. The second is investing in real estate without buying or owning property. The first one is what we're going to concentrate on in this presentation. So we're going to look at investing in real estate through owning and buying property. But what does it mean to invest in real estate without buying property? If you're curious what that means, we're not going to spend time on that, but I will just share with you a quick list of some examples of that. So without buying property, you can invest or get involved in real estate through purchasing shares of real estate investment trusts, purchasing shares of real estate mutual funds or real estate ETFs, or purchasing shares in real estate companies, right? You can also do wholesaling, which is pretty popular right now. You can be a host for a short-term rental, which essentially is a property manager. You can participate in online investment platforms, which are essentially funds that purchase real estate. Or you can get involved in the real estate industry by working in the industry, whether that means being a realtor like myself, or a mortgage lender, or someone who does inspections, or works in appraisals, or title companies, or property management, you name it. The real estate industry is a gigantic industry, and there's a lot of opportunities out there. I remember someone once told me, in real estate, you make money by selling it, and you can create wealth by owning it. In real estate, you can make money by selling it, and you can create wealth by owning it. So these are just some of the options that you can get into real estate without buying property. But let's talk about owning real estate. When it comes to owning real estate, there's also a lot of different kinds or types of real estate projects that you can get into. Flipping houses, or fix and flips, as some people say it, is pretty popular. So basically, flipping homes, and we'll talk about these different types a little later on as we go through the presentation. A second thing is buying a rental property for long-term rent. Okay, and that could include multi-family, so whether it's a single unit or a multi-unit. Another one is buying vacation properties, so for short-term rentals, and those top three are really what we're going to go through in the next few slides here. But there are also other things such as purchasing commercial space or purchasing land. And when you purchase land, some people, buy a land and then build on it and then sell that home, or some people buy land and get the land ready for it to be built on and then sell it as an already developed land. So there's a lot of different types of investment projects that you can get into through buying or owning the property. And we're going to kind of talk about the first three: flipping houses, buying rental property for long term, and buying vacation properties. All right. I'm kind of going to go through fast through this, the rest of the slides, just because we're really short on time. And again, I'm not going to cover every little detail, but I will give you some great information. And I welcome you to schedule a call with me so that we can talk further one-on-one. When it comes to flipping houses, basically, you buy the property, you fix it, and you sell it. Okay. And the intention or the benefit is that you're getting one big lump sum of a return, right? So you buy a property, you fix it, you sell it, and you profit off, the difference, or your revenue minus all of your expenses, and there's a profit there for you. Now, your profit may not be like what you see on TV. So all like the HGTV shows showing you flips that are, $50,000+ in profit per flip. It's possible, but it's not very common. right? Yes, those numbers are doable, but it's not very common. Most property flippers are seeing, you know, $20,000 to $30,000 of profit on a flip. Okay. And again, some people, if they don't do their numbers right, they may see a loss, or they may just barely break even. So you definitely want to do your numbers right. But flipping a property, you buy the property, you fix it, you sell it, and you get one big lump sum return. What flipping houses requires is it requires an initial investment. You need to have the money to purchase the home and all of the other costs that go into the purchase of the home. You also need to have the funds to be able to fix or repair the home, plus carrying costs. A lot of people don't think about carrying costs, but you're going to be paying stuff on a monthly basis while you have that home. So if it takes you 6 months to rehab and sell a home, each month you're going to be paying taxes on it. If you're in an HOA, in the homeowners association, you're going to be paying HOA fees. If you have a loan or you finance the purchase of the property or even the rehab work, you're going to be paying an interest on the financing, and you're going to be paying utilities. So one thing you have to calculate when doing your numbers is the carrying costs you're going to have, estimated by how many months it's going to take you to rehab and sell that home. And those costs could add up depending on how high your taxes are, how high your interest is, how high the HOA fees are. These costs can really make a big difference in your calculations. And there are also unexpected costs and things that may come up that you may not be aware of when you are purchasing the home. So it's very important that you run the numbers, that you account for every associated cost that will be involved in the project. And I personally also add a buffer. So you want to add a few percent on top of your costs, just so that you're in the clear in case something happens that is unexpected, in case things take longer than they're supposed to, you still don't come out with a loss and you still profit, all right? You also want to take into account your target profit. How much money are you looking to make? Excuse me. You want to take a look at how much money you're looking to make and calculate that in your numbers, build that in your numbers so that you make sure that when you sell the home, your profit is also accounted for and you make the money that you're looking to make. It's also very important that you understand the market and the resale value of the property, or what some people call ARV, which is the after repair value. After you're done with it, after the home looks beautiful, again, how much will it sell for on the market? All right. So when it comes to fix and flips, you want to be financially ready. You want to have the money or access to the money to complete the project. It's unfortunate that, the fact that I see a lot of people basically with projects have done because they didn't estimate the scope of the project correctly. You want to know what is selling in that specific market, how much is it selling for, and how long does it sit on the market before it sells. And you want to have a general knowledge of home improvement and real estate specifically in that market. You also want to have your resources in place, ideally before you get anything started. So that means your contractors, your material suppliers, a good agent like myself, and a good agent will do a lot of work for you and will put pieces together for you, is really going to help you out a lot. And also anyone else that you may need depending on the scope of the project. So if you need engineers, if you need photographers, kind of depends on what your project requires. You want to have all your resources in place. So these are just some of the key tips in order for you to be well prepared and to be successful when it comes to flipping a home or doing a fix and flip. All right, and we'll talk about financing a little later on. Another big popular real estate investing options is long-term rental property. So basically you're purchasing a property with the idea to rent it out to people who will live in it for a year or more. Now it could be month by month, but the idea is for it to be long-term. The benefit is you generate a monthly stream of income from it. Some of the things that will require, obviously purchasing the home, maintaining the home, and dealing with tenants, and also being compliant as far as any legal items, laws, ordinance, rules around landlord and tenant laws. The legal part is very important. As a landlord, you have to really know what's going on in that township or municipalities also the laws and rights that you have as a landlord, and the laws and the rights that tenants have as well. So you need to be very well versed in that. Or you can hire a property management company that kind of takes care of a lot of those issues for you. Property management companies do take a percentage, but they can handle things like maintenance of the property. They can handle promotion of the property. They can handle lease agreements with tenants, collecting rent, maintenance requests, evictions, all of that stuff, obviously for a fee. So if you're going to have rental property, especially long-term rental properties, some people choose to manage them themselves. Some people choose to hire property management companies and not deal with the management of the property themselves. When it comes to rental property, especially long-term rental property, this is how you can go about calculating your return. A lot of people calculate return on rental properties using something called the cap rate or a capitalization rate. And what that means in basic terms is the percent of return that you're going to receive per year. Okay. And the way they calculate cap rate is the net income divided by the cost of the property, or the net income divided by the market value of the property. So for example, if you are looking at a property that is listed for $500,000, and let's say you're going to buy it for that price, let's say the property produces an income of $55,000 a year, and you're going to have as a landlord expenses of $15,000 a year. That means your net income is $40,000. You take $55,000 minus $15,000, that gives you $40,000 of net income. So you divide that net income of $40,000 by the purchase price that you bought it for, which is $500,000. That gives you a cap rate of 8%, right? That means that's your yearly return is 8%. Cap rate is a big lingo when it comes to rental properties. That's actually how some really big investment companies buy properties, is based on the cap rate. So a lot of big investors or companies that invest have a target cap rate that they want to be at, and they shop around for properties, usually multi-family units, that have a certain cap rate. The cap rate is going to change from market to market. Every market is going to have somewhat of an average cap rate that's specific to that market. All right. Any questions on any of that stuff so far, or long-term rental properties? Just drop in your questions in the chat if you have any questions. I'll try to get to them. If I don't, I'll definitely answer them after the webinar with you one-on-one. Another big type of investment as far as owning properties is short-term rental properties, which has become more and more popular in recent years. And basically you purchase the property and you rent it out as a short-term or a vacation rental. So instead of renting it out to someone to live in it for a year or a month to month, you're renting it out by night, basically like hotels, okay? And some people have a requirement, so they only rent like a minimum of 2 nights or 3 nights, but usually short-term rental properties range from, a day or a night to like a week. Some people rent it out for a month or a few months, but that's kind of a rare situation or specific situations where maybe someone is just has a project in a certain town and they prefer to rent a home like that, and they make a deal with the owner that they rent it out for a few months. Okay. A huge benefit of short-term rentals is that the potentially high revenue. So the money that is produced by a short-term rental property is much higher than the revenue that's produced by a long-term rental. So if you have the exact same house, for example, in a vacation city, and you are renting it to some people to live in it for a whole year, you're not going to make as much money on it during that year as if you were to rent it out just on a night-by-night basis, or as far as short-term rental. But it does require you to be more hands-on. It requires marketing. It requires you handling bookings. Requires you corresponding to inquiries and guests, and ensuring a great guest experience. So it's just a little bit more hands-on. Instead of having one tenant that's there for a whole year, throughout a year, you're going to have a lot of different guests that are booking. So you're definitely communicating with a lot more people. You can also get people to manage Yeah, like a beach home, for example. Exactly. So you can do it yourself, and a lot of people do it themselves, or you can get someone to manage it for you, much like a property management company does for a long-term rental, obviously with a fee. There are also a lot of people that host for you, so they'll market it for you. They'll handle all the inquiries, all the communication with guests, and again, they'll take a fee. All right. So the things that you need to know about short-term rentals, one, you need to know the market and the potential for that property before you buy it. You want to see the competition. So you want to see how many homes are already being rented in that area on websites like Airbnb, HomeAway, VRBO, and other sites. You want to see, how many homes are in that area currently being rented. You want to see how often they are booked, or essentially you're trying to kind of estimate how often your home will be booked. You want to see how much they're charging so that you can see how much you can charge yourself. Essentially, you're trying to get to how much revenue can this property bring throughout the year, and what are your expenses going to be. Okay, so before you get into that business, you want to make some educated estimations on the revenue and your expenses for that year. A few things to know about short-term rentals. Somebody might say, well, it seems like short-term rentals make a lot of money than long-term rentals. Yes, they can, but it is a little different, and there's a few other things that you got to watch out for. A big thing right now is local ordinances and laws and regulations. So townships and local municipalities regulate, rentals inside their local ordinances. And recently, some townships have been banning short-term rentals because to some of the local residents, they are a nuisance, and some of the local residents and neighbors don't like when a home next door is basically functioning like a hotel. So it has raised some issues. So you have to really watch out for the local laws and regulations. You want to search the township ordinances and what they allow and don't allow as far as short-term rentals. You also, if the home is in an HOA, you definitely want to check out and read the rules and the bylaws, and maybe even talk to the HOA board and see kind of what's on the horizon as far as short-term rentals in their local community. And also know that things can change. At any time, an HOA board or a township can meet and decide to ban short-term rentals. So anything can change at any time, and that's why I suggest that you don't just buy a short-term rental property based on the potential revenue it brings, but you really want to buy it also based on the value of the property. So in the case that you have a short-term rental property, you're making great money from it, and then the township or the HOA decides to stop short-term rentals, you can sell the property just as a single family home, or just like as a regular residential home, and not sell it as an income producing property. So if you buy it based on the value of the property and not just on the potential income, if kind of things go wrong, then you can sell it and not take a loss on the property. Plus, you would have already made money on the rental income that came from it. All right. So let's move into how do you fund real estate projects, and what kind of financing could you get. So there's a lot of different ways you can finance real estate projects. Very first one, and probably the most powerful thing, is cash. So obviously, if you have the sufficient amount of cash to buy that property outright, you can just go ahead and do that. The second is a mortgage loan. So a lot of people don't think that they can get mortgages for investment properties, but you can. So for example, if you never had an FHA loan, you can get an FHA loan and pay as low as 3.5% down and buy a multi-unit up to 4 units if you intend to live in one of those units. Okay. You can also use conventional loans to buy investment properties as an investment, even if you're not going to live in it. However, your down payment is going to be a little higher and your interest rate is going to be a little higher. Getting a home on a mortgage is still going to be cheaper than any of your other options as far as interest rates are concerned. You can get a home equity line of credit. So if you already own a home yourself or a relative owns the home, you can get a line of credit against that home. Interest rates on home equities line of credits right now, they're about 5 to 6%. Obviously, that also depends on your credit. You can get an unsecured business line of credit. If you have an LLC, even if the LLC is 1 day old, you can get a line of credit, unsecured line of credit from $25,000 to $150,000, and you can use for anything. Essentially, you're using it as cash because it's a line of credit. You can get personal loans from a variety of institutions. Personal loans, the interest rate could really vary from 6% and up. Oh, I didn't mention unsecured line of credit loan interest rate. Unsecured business line of credit interest rate, if you have a good credit score, they're around 7 to 8%. Personal loans could differ. They could be from 6 and up, even as high as 30%. Hard money loans are basically hard money lenders. Hard money lenders loan you money based on the project itself. So they're going to evaluate the project as well. They want to know how much is the value of the home now, what it's going to take to repair it, and how much will it be worth afterwards. And then they will lend you the money that way. Hard money loans can be expensive. They usually ask for 2% upfront. So you're paying upfront 2% of the purchase price plus about a 9 to 10% interest rate per year. Now, you just have to do the numbers, right? So even given that you're paying all those fees in loans or in financing, if the numbers still work out and you're still making a profit, then it makes sense, right? And if hard money loans is the only way for you to kind of finance your project and the numbers work out, then why not? You can also seek out private investors or partners, so people who have money to invest but may not, maybe just don't have the time or want to go through the process themselves. You can kind of work out a deal with them where you can handle and manage the project, and obviously there is a percent to you and to them. Know that with each of these options, the interest rate and the requirements and the terms are going to differ. Also from company to company, from lender to lender, those things are going to differ. I do have resources in pretty much all of those categories. So if you're looking to get an unsecured line of credit, if you're looking to get a hard money loan, if you're just looking to get an investment mortgage, I'll be more than happy to connect you with some of my resources, and we can go from there. All right. I'm not going to spend too much time on finding the property, but I want you to know that there are so many different kinds of properties out there, and each of these properties have their own processes in terms of how you buy them and their own terms. So you can have properties that are sold standard sales, which is basically just normal buying and selling. You can have foreclosure properties, and foreclosures are there's so many different kinds of foreclosures, which includes like bank-owned foreclosures that are just selling on the market, HUD-owned foreclosures that are also selling on the market, sheriff sales, which a lot of people see online and send to me, and they say, what about this home? Sheriff sales are pretty complicated. I won't get into that right now, but I'll be more than happy to discuss that with you. There are also short sales, which are not very short at all. I'm not sure why they call them short sales. They kind of take forever. There are also auctions. There are public auctions, there are online auctions, and there are sheriff sales type auctions. So again, there are so many different kinds of real estate sales out there, and each of them come with their own terms and process of how to purchase that property and what is required to purchase that property. All right. What questions do you guys have? I know I went pretty fast, but I was trying to make the most of the time. What questions do you guys have? So in the next few minutes, I can try to answer some of those questions as I begin to wrap things up here. All right, so the steps to take. So, if you are looking to invest, what steps you want to take. First thing is really just schedule a call with me or a real estate professional, and I'll pretty much help you from there. We'll take it step by step. Once we meet or once we have that call, I will discuss with you your goals. We're going to assess your situation, and we'll determine what strategy and steps kind of suit you best. From there, based on that conversation, I'll connect you with the right financial resources for you. I'll help you search for properties, evaluate the opportunity. I'll help you with the purchasing of the property, and then putting in place any and all resources that you need to manage the project post purchase. And if you're looking to be an avid investor or build your portfolio, then we just keep doing it again, right? So today we kind of covered your goals and choosing your strategy. We covered some real estate investing options, and we covered financing and funding your projects. I know it's a lot of information, and I might have went through it pretty fast, but hopefully you found it helpful. Hopefully you found it informative. You can go ahead and schedule a call with me, a 15-minute call. No obligations. It doesn't commit you to anything. It's basically just a conversation where we can discuss your goals and determine what strategies suit you best. And then I will tell you the steps that you need to take from there.